Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, December the 8th, the year 2017. It's NFP Day, and we're going to do the weekly wrap-up. As you can see here, we had a nice breakout for the week. We didn't fill the gap. It looks like we're not going to fill that gap. There's a few gaps that didn't get filled this week. But as you can see here, taking that one single horizontal line cross right there, or if you traded the buy zone, would have paid off. It's NFP Day. You can see the price action here. Right there, the announcement. It went up. Price action trade right there. It went down. Here you go. Price action trades. Look at it. Red, green, didn't break. Okay. Red, green. Broke a little bit. If you got in, there you go. It took a tiny bit of heat, but it was off to the races. And you can see it again here. We're looking at the H1. Price turned right there. Going back to the daily open. Rat trade. Anywhere in the zone, but you can see here there's not much separation, only 5 pips between the zone, so it's kind of treacherous trading there. Looking at the pivots, it came down to the weekly S2 and turned around. And here we go, daily pivot. As you can see, it didn't hit the pivot, so we've got a missed pivot. We've got a missed pivot back there. And once again, just looking at the daily, you can see close minus open. You can see it's approaching 37 pips off the low. Not much of a range here on the euro. Not much range at all. You can see the pound pairs have definitely ranged today. Once again, looking at the wick zone, it crashed right through. Not much of a wick zone on that lower wick. But once again, if you just played the wick, you made money. See, that's part of the thing about trading. You have to be consistent. You find something with the edge, and then you don't second guess it. Once you find the edge, it's all up to the execution. You found the edge. There's no more analysis, no more thinking, no more. Everything from that time is pure execution. And you don't have to, be switching indicators and switching methods. You find that one thing with the edge and then you just exploit it. You have to have laser focus. So you pick that one trade, that one method. It could be one of mine or somebody else's. Doesn't have to be mine. But the thing is, you just have to realize you're either trading a crossover, or you're going to be trading a breakout, or you're going to be trading a reversal. And actually, a breakout is a crossover because it's price is crossing over or through a line. It's just, once again, it's just so simple. I am amazed at the deluge of emails, everybody trying to sell me something so I can be profitable. I mean, I really do have to laugh when it's so much effort people put into something that's really so basic. And I think there was a couple questions yesterday or comments that had to do with taking pips off the table and how do you know, and setting up systems, and I thought I've shown all that, but I realized that maybe I still haven't been clear. So I don't really, I'm going to have to work on an explanation. Because when I look at these charts, you know, I've been doing this for so long, it's just, everything is just so apparent to me. Let's put this down, let's just go to M5. A lot of people like to trade on the M5 time frame. And so, yeah, we had NFP day. But I mean, you know, you can apply these trades. I mean, you can look right here's the open. You can think of a buy zone, okay? You can see here the previous candle. You can think of this as a wick zone right there, because it is a wick zone. It's an M5 wick zone. So you can take that trade. You can think of it in terms of price action. Price is either going to break out of one end or the other of the previous candle, or it's not. So basically saying either you're going to have a breakout to one side or the other. For example, right here, it broke out the high and the low of the previous candle, or you're just going to break out one side, like here and here, and or you're going to be an inside bar, like right there. I mean, those are the only options. There's no other options. I mean, it's not like there's a million options. There's only a handful. You break out at the top, you break out at the bottom, you break out of both, or you don't break out. That's it. So it can't be simpler. Now, that being said, why is it so hard for traders to make money? Well, they're not consistent. They don't stick with the method. They don't define their edge. They trade when they don't have an edge. If you don't have the edge, don't trade. If you don't see it, don't trade it. Don't just force the trade. You know, you've heard this stuff before, but sometimes I guess some people need to hear it a second time. And once again, once you put a trade on, your job is simply to manage the risk. You don't want to lose more than what you want to risk. So once again, if it's 1%, then you put your stop loss at a place to make sure you lose maximum 1%. That's it. That's as simple as I can say it. You know, it's basically finding the edges. I've done that. I mean, the buy zone, once again, even with the euro, it's only ranging about, average range is about 40 pips or so on the daily when it used to be over 100. But still, the buy zone only encompasses 20 pips, so price is going to stick out of the buy zone. Where is the buy zone? It's somewhere. Where did I put it? I got so many charts up. Right here. So once again, we had a trigger here, took a little heat, finally paid off. That's it. It's that simple. What's the edge? The edge is the distance between here and here is 20 pips. The range is 40. You can't fit 40 and 20. It doesn't work. It's got to come out. That's the edge. You know, I spoke of the wick zones once again. Here, what is the edge? Let's switch time frames here. Just what is the edge? The edge is, okay, it's really small, but price does not like to stay in the wick. It just doesn't, of the previous day's candle. We might be able to see it better here, but we can look at let's look at dollar Canadian. It's been kind of active. You see here, it broke out there. Somebody's going to say it's a false breakout. No, it's just a small tiny breakout, but it's a breakout. and then it came back the other way and broke out to the downside. Price does not like to stay in the wick. You can see it all over the chart. It's just that simple. I mean, that's your edge. So you know if price is in the wick zone, you've got a potential trade. So let's see. Here we go. We got one in the lower. Let's look at euro yen. That's one of my trades I like to make. So you can see here, it's in the upper wick zone and it already jumped out. I mean, high to close 21 pips. So let's see, what was the high? High was 45. The trigger was 27. So what, 18 pips? So maybe you picked up 10, 15 pips on that trade. Not bad, right? It's just that simple. The statistics, it's about 70% of the time price leaves the, leaves the wick zone. It just doesn't like staying in there. So once again, I don't know how to explain it any different. Maybe I'll think about it. Maybe I can explain it clearer. Some people seem to get it, others don't. So I have to figure out how to explain to those who don't seem to get it. But, once again, no squiggly lines were harmed in the making of this video. Even though I'm thinking I might have to harm some squiggly lines soon, just for the fun of it. But, if you use these 5 lines, high, close, mid, open, low of the previous days or previous candle, doesn't matter if a day, week, month, or hour. If you just use these 5 lines and you trade when price moves to the line and starts to cross over, you'll be able to make some pips. Now, I was talking to one of my trading buddies yesterday, and I realized something. If you've got a small account, I'm talking, $100, $200, $500 account. If you make $1, that's not a bad percentage return. I mean, on a $100 account, it's 1%. $200 account, it's 0.5%. So, if you only make 2 pips, that's like 0.2% on a $100 account. But if you do that 5 or 10 times a day, a trading session, you're actually making a nice percentage return. Now, you're not getting rich because somebody says, how am I going to make my millions? Well, if you're going to make your millions, you're going to have to be there, be consistent, and grind it out. But chances are, you're not going to start out with a $100 account. Now, maybe if you start out with a $1,000 account, and you start making 1 or 2% a day, yeah, maybe in a year or two, with a little luck, lots of skill, lots of persistence and focus, and basically not making any mistakes and just grinding it out, you could probably get there if that's what you want to do. But you might be putting in 12-hour trading sessions every day. You might have some sleepless nights if that's what you want to do. So it is possible. But like I said, even if you look here, I can switch it down. I got it set to daily. But you can see here, just taking those crosses. I mean, people, they're asking me, well, how do you know when to only take 2? I thought I explained it. But if you see price action telling you something opposite, if it's telling you you should be short and you're long, or you should be long and you're short, listen to price action. Follow it. Do what it says. I've explained it on this chart here, I don't know how many times now. So anyway, fellow traders, that's the weekly wrap up. I hope your week was profitable. And as always, it's not what you trade, it's how you trade it. TheRumpledOne signing off to enjoy the weekend.